Hello grade 12s, welcome to another accounting video. In this video I'll be doing a question on the VAT, specifically the VAT control account. So the information relates to ABC Limited for the VAT period ended 31 July 2020. The business is owned by non-volatile goods are subject to 15% VAT. Right? Required calculate the VAT amount that is either receivable. We know that if it's receivable, your balance will be on the debit side of the VAT control account and it will be a VAT input balance. And if it's payable, it will be credit balance, it will be a VAT output balance. Right, a VAT output balance payable to SARS on 31 July 2020, 11 marks. So let's draw up the VAT control account, guys. The VAT control account. And then this is the VAT control account. This is the debit side, this is the credit side, right? Fine. The credit side is where we have our output. Don't forget, guys, this is the VAT we receive. Here input is the VAT we pay. Fine. Let's go to the adjustments. Details. Amount owed by SARS on 1 July 27,200. So SARS owes us the amount, right? We don't owe it to SARS. SARS owes us the amount. So what is it, guys? It is VAT. It is VAT input, right? Because it means we paid more VAT. So it's an output. It's an input VAT balance. So owed by SARS 27,200. So you put it inside here. It's the balance. Right, amount from the journals on 31 July 2020. So we have in total sales. This is the sales figure, but remember, guys, we are just focusing on this column, the VAT. So whatever we want to calculate the VAT, because this sales figure is recorded in the income statement, right? So you calculate the VAT, you just want the VAT. So you know that sales, it's customers who bought from us, therefore they paid VAT to us, which we supposed to pay to SARS. So we owe SARS. Therefore, what are we going to write here? 7,250. That's what we are crediting. We are crediting our VAT output. What is the contra account? I will be debiting. It will be bank. It will be bank. Right? How do you know? How did I know that bank is the contra account? It's because when we record bank. We debit bank, right? When the sales occurred. When the sales occurred, we debit bank and we credit sales. We also credit output VAT. The amount from the bank will be the 495,000 and the 74,250, right? And then here we'll just credit with 495,000 and 74,250. So the easiest way to look at this is you ask yourself, when we're selling goods, which two accounts are debited? We are debiting what? We are which two accounts are involved? Is bank and sales, right? And in this case, we debited VAT control. So if we debited VAT control, what else is debited? Is sales, and then the remaining account is bank, which is debited. That's the one that's the contra account. So if it was on the if we enter something on the debit side of the VAT account, to make it more clear, to explain it more clear, if we debit something on the debit side of the VAT account, you ask yourself two accounts. Which other account are you debiting on based on the transaction? For example, let's do the purchases one. So for the purchases, we only given the amount excluding VAT, right? Purchases. So we are the business, we purchase stock from our suppliers, we must calculate the VAT, right? So what you're going to say to calculate the VAT, you're going to say 159,000 multiplied by what? Because it's purchases, guys. It means it's us who are paying the VAT. So you're going to say 159,000 multiplied by 15% all over 100, all over how much? All over 100, right? Because we're looking for the VAT. So 15% of 159,000, that's 23,850. So we are debiting 23,850 as what? As VAT input, right? And when goods are purchased, like I said, the method you must use. When goods are purchased, what are you debiting? Trading stock. What are you crediting? Bank or creditors control. Therefore, contra account will be the opposite will be the opposite account, which is the account which are crediting, which is bank or creditors control. But most of the time the examiners do not mark the contra account. They just look for the figures. Fine. Stock returned by debtors. So initially what had happened, the debtors had bought from us, therefore they paid VAT to us. But when we are now returning their stock to when they are now returning our stock to us, right, they are returning the stock to us, the stock they initially bought, we are doing the opposite. The VAT that they paid to us, that we are supposed to pay to SARS, we are paying them back. So we are cancelling that VAT. We're taking that VAT to where? To the debit side. So how do we calculate that VAT? We're given the VAT included amount. So this amount includes VAT, right? This amount includes VAT. Therefore, it is 115%. Unlike this one was 100%. Hence, I said over 100. Because this one is 115%, you're going to say 17,250 multiplied by 15, which is the VAT we're looking for, all over 150. Right? You see the difference. When an amount includes VAT, you use 15 all over 115. When it excludes VAT, you just simply say 15%, 15 over 100 of the amount. So 17,250 times 15 divided by 115, what you get? 2,250. That's your VAT amount. So it goes to the debit side, right? So you know when goods are returned by the debtors, what do we debit? We debit on the sales, because obviously we're going to first debit the cost of sales. Debit the trading stock because it's coming back, and credit the cost of sales, cost price, right? That's based on cost price. Based on selling price, remember you can't debit sales, so you're going to debit your debtors allowances. And what do you credit? Because debited, what do you credit? You credit your whatever that you'll be using. You had received the money first, right? You had received the money. So but now, because it's stock that's returned by debtors, you debit your debtors allowances and you credit you'll credit your debtors control account, guys, because it was stock returned by debtors. So we had initially debited the account to show that they owe us money. So now I create the debtors control. So that means here you'll write debtors control, right? Simple as that. So you just look at the opposite account. Fine, we're not done with the table. There are bad debts excluding VAT, 30,000. Let's calculate 15% of 30,000 right away. It gives us 4,500. This because they initially bought the goods to us, but now they did not pay. We are cancelling their debt, so it's going to go to the debit side. Because they did not pay, we can't credit, because it will mean that they have paid the money that we're going to take to SARS, but they didn't pay, so we are cancelling that debt. So hence we must reverse. So it will be how much? 4,500 on the debit side. And what had initially happened, they had debited bad, not initially, like when they're recording their transaction, they debited bad debts and credited debtors control. So that's our contra account, debtors control. Right. Okay, the following transactions were not taken into account. So even here for bad debts, we could have simply just said amount including VAT subtract amount excluding VAT. So 34,500 subtract 30,000 gives you 4.5, right? Fine. See, the following transactions were not taken into account. Stock taken by the owner. Right. So stock taken by the owner is known as drawings, right? It's known as drawings. The stock is cost price 9,000 excluding VAT. Right. So what had we initially done before the stock is taken by the owner? The stock had came into the business. We had bought the stock, right? We had bought the stock, so we paid VAT input. But the last person who used the stock is the owner. He took the stock, therefore he must pay the VAT. Hence, it's VAT output. You see, guys, this is how it works. You ask yourself what had happened before, and then what is happening now. So you need to calculate 15% of 9,000. It'll give you 1,350. And then you debit drawings and credit what? Trading stock. Now, so that means here the contra account will be the one you debited, which is drawings. Right, guys? That's what it means. Fine. And then VAT on discount received from suppliers. Total discount received amounted to 23,000. So when we buy goods, sometimes suppliers, they give us discount, right? And what does the discount do? The discount helps us to pay less. It helps us to pay less VAT, guys. It helps us to pay less VAT. So in other words, we'll pay less VAT input. Hence, it must go where? To the VAT output side. Just simple as that, guys. It's simple as that. So this is what you do. You, because actually I believe this is because generally when you buy goods, from a supplier, the discount that the supplier gives you, you do not record the discount, right? You do not record the discount. But in this example, the discount that is being referred to, I believe it's the discount that you get when you pay the supplier. You see, the discount received, right? Is the discount received. So the discount received, it's the same analogy. It decreases what the VAT input we're supposed to pay. So you're still going to credit, because when you pay our debt, our creditors, the debt that we owe our creditors, we are paying VAT input. But if we offer a discount, it means you're going to pay less. So you're just going to say 23,000 multiplied by 15%, because that's this is the total discount received. So you calculate its VAT, which is 3,450. So you multiply this by 15%. Now what was debited? We had debited what? When we receive a discount, because we were owing them, we now debit creditors control, right? And we had credited discount received as an income, and we credited VAT output. Therefore our contra account is this, creditors control. Right, guys? So if it was just discount received at the point where you were buying the sales, where you were buying goods, of course it becomes easy, because you just remove the discount from what you owe and then calculate the VAT from what remains from the amount. So if you had bought goods worth 50,000 and you received discount of 10,000, you just show in your books that you bought the goods for 40,000. There's no need to show that you received a discount, right? Fine. Then you calculate the VAT from the 40,000. So in this case is the discount received when we pay the suppliers. Now we need to close off our account. Now let's just add these amounts. It shows that this side, the credit side, is more than the debit side. So what it tells us is that we received more VAT than we're supposed to pay. Therefore we're going to owe SARS VAT. Right, we're going to owe SARS money, so it will be VAT payable. Right, and it will be VAT payable. You add these, they'll give you 79,050, and VAT payable will be this, subtract all of these, which will give you 21,250. So that's VAT payable to SARS. You'll have a credit balance. VAT payable to SARS, 21,250. Right, fine, guys. I hope this video was helpful. See you on more other videos.